All right, we're back. We're better than 300 on the Dow with our calls of the day now, starting with AXP, American Express. Top pick, Morgan Stanley. That's ahead of earnings on Friday. Targets 188. Jason Snipe, you own that.
Yes, sir. And I've continued to stay bullish on this stock. I think, just the travel and entertainment boom continues to see momentum, right? So whether it's business travel, retail travel, it doesn't matter. I think that's obviously benefiting the stock tremendously. Last year, in the last quarter, network volumes were up 16% from prior year. They guided revenue for 15 to 17% in this coming quarter. I think they meet that. And obviously we've seen a lot of growth already in the stock, but I see it continue to move further this year. That's why I like it here.
Steph, you obviously do too. This is the one you teased, right? You bought more.
Yeah, I did. It's new for me. I used to own it, and I made a lot of money in it, trimmed it, and now it's a new
right,
position.
You bought it again, not more. You bought it again.
Yeah. And a lot of it is because of the macro, right? From goods to services, but goods is still okay too. And it's their size and their scale, and I like the mix. 20% is NII, and 80% of their revenues is fee-based, and I like that very much.
Net interest income.
Net interest income, that's right. And the one thing is that their expenses are really high right now because they're investing, which I like to see. But if we were to go into a recession or see a material slowdown in the consumer or small and medium businesses, they could dial that back down pretty quickly. So I think 15 times for 15% growth is pretty attractive. And I started a small position. They report on Friday. Sometimes it trades sloppy around the quarter. I'll buy more.
I still feel like one stock this year, maybe because it's gotten drowned out a little bit, Josh, by some of these other tech stocks, is Uber.
Yeah.
That's just had a great year, okay? Named a top second half pick now at Roth MKM. It's been one of your top picks, if not your top pick, the entire year. And it's now above the IPO price.
Yeah.
47 bucks, 47.20, near 4% again today.
I think it's very early. I know Uber's been around since 2009, and it's been public for a long time. But now that they are reaching full-year profitability, that sets off a new chain reaction of what could happen here. This is, I'll quote, this is my largest position, by the way, personally. This is the analyst at Roth MKM, $59 target, top internet pick, despite the fact it's up 90% year to date. We reiterate by given accelerating free cash flow generation. That's what's important right now to investors in large cap tech stocks. That's what they're focused on. These are the companies that are being preferred by the flows. They want to own stocks like this. Uber wasn't in that category last year. It is this year. And then you've got all these non-fundamental catalysts. What are we talking about? S&P 500 edition. This is a $90 billion plus market cap right now. The smaller names in the S&P 500 are about 16, 17 billion market cap. So obviously this goes in. What was the last large cap tech stock to get added to the S&P, and what did its stock price do? Anybody remember Tesla? They held it out of the S&P until they got 4 straight quarters of profits, and then they had to add it. And believe me, they didn't want to. And all of the accompanying fanfare that went along with that, you had a big short squeeze there too. That's one. Potential for stock buybacks. Nobody talking about Uber 2 years ago could even utter the word stock buyback with a straight face. They were losing money in Eats. They were losing money on rides. They were starting up freight at a loss. Now that's something you could realistically picture them doing, along with other things. So I think Dara has pulled off one of the great turnarounds that we've seen. Uber's up a lot. I don't think anybody needs to chase into it. However, I can see how things are going to change now that the company has reached profitability, and I think it's going to be in a different category of stock going forward, along with some of the other tech giants.
All right. Lastly, speaking of up a lot, finally, I guess Jason Snipe, United Health.
Yeah.
One of last year's best.
Right.
One of this year's worst.
Right.
In terms of that type of stock, right? Is getting a nice move today, near 4%.
Yeah, listen, the quarter was really strong, and I attribute it to the services business. Optum was up 36%, which is a really strong number despite higher medical costs. So I really like that here.
Bernstein upgrades it today, by the way, to outperform. They take the target to 603.
Yep.
Not 600, 603.
Do you worry about utilization rates rising, though?
I do, and I think that could be challenging. So we'll see how it plays out. I think the challenge coming into this year is kind of Medicare, like looking into obviously the election season, Medicare cost pricing being on the docket. But I still believe it's a stalwart in this space. It's just it's a compounder. It's worth owning.